We want to help make the dreams of first home buyers a reality. So we have decided to go further at this election and pledge to adopt a scheme similar to what's been running by our Kiwi cousins in New Zealand for many years now. Our new first home loan deposit scheme, I announced today, will enable first home owners to buy their home with a deposit of down to 5%.
I do believe in the American dream. I believe there is such a thing as the American dream. And I believe those of us who've been given positions of responsibility must do everything we can to spotlight the dream and to make sure the dream shines in all neighborhoods, all throughout our country. Owning a home is a part of that dream. It just is. Right here in America, if you own your own home, you're realizing the American dream. And so here are some of the ways to address the issue. First, the single greatest barrier to first-time home ownership is a high down payment. It is really hard for many, many low-income families to make the high down payment. And so that's why I've proposed and urged Congress to fully fund the American Dream Down Payment Fund. This will use money, taxpayers' money, to help a qualified low-income buyer make a down payment.
They will include guaranteeing to approved applicants the additional loan amount taken out by the first home buyer to cover the difference between the lower deposit of, say, 5% and the 20% of the value of that property. This scheme would give preference to working with the smaller banks and the non-bank lenders to boost competition. Of course, the lenders will be still the ones lending the money. They would still do all the normal checks on the borrowers to make sure that they can meet their repayments. This isn't free money.
Payment. And so that's why I've proposed and urged Congress to fully fund the American Dream Down Payment Fund.
This will work by the government's National Housing Finance and Investment Corporation that I established as Treasurer, supporting these first home borrowers.
Many thanks to a few of my subscribers who pointed out that George W. Bush, made a very similar, as politicians do, encouraged home ownership. We know why they encourage it, because that way they get you, but you know who and what. Once you own your home, you have to be paying taxes, and you are pretty much stuck with it, especially in Australia, because you are much less likely to be able to get out of the bad loan or the bad deal as it is in America. In any case, thanks to a couple of the subscribers. When I created yesterday's video, I didn't realize that this actually existed. 2002, this is obviously a few years before the global financial crisis and before American subprime crisis, which pretty much caused the whole scuffle. So we know how the whole plan worked out for America. Again, this is 2002. And we know that 2006, 7, 8 was caused by the subprime issues. So there's nothing new under the sun, unfortunately, ladies and gentlemen.
Look who's helping first home buyers, but why it's taxpayers who are bankrolling the risk.
There are government outlook, or outlet, should I say, the ABC News, but I have to give it to them. They're pretty funny. Game of Homes. Let's see this new clip that came out last night.
The government and the Labor agree on virtually zero, but a promise to give a leg up to first home buyers has seen rare bipartisan support. The Prime Minister announced the government will back borrowers with as little as a 5% deposit. Labor's matched the scheme. It's a strange announcement to come after the Royal Commission's year-long lashing of risky and inappropriate lending. The scheme, which has light on detail, will be open to singles on less than $125,000 and couples earning up to $200,000 who have saved up to 5% of the value of a home. Restricted to 10,000 first home buyers, the scheme could make very little difference or be a boon for banks.
20% deposit is a big mountain to climb for so many families, and particularly those on low and middle incomes who are looking to buy the very homes around here or the established homes around Western Sydney and other parts of the country.
The government scratched around yesterday looking for something to announce because, as you know, all they can do is talk about us. So they've proposed a modest program, a restricted program, which may potentially assist 10,000 people.
Not surprised.
Okay, so Bill Shorten didn't seem convinced with the new announcement from the government, yet he just said, we'll back it anyway. Although it's kind of average, we don't really see a big deal about it, but hey, we'll back it because we both work for the bankers. We want to create a boon for banks.
Surprisingly, the Peak Organisation for Housing Construction supports the scheme. The Housing Industry Association says the policy comes from its election imperatives document and says it provided the federal government with modelling. Lenders and insurers say they were left out of the loop. HIA's Graham Wolfe joined me from Canberra. Treasurer Josh Frydenberg said that he consulted with industry before announcing this. Did he consult with you?
Well, it was part of our federal election policy imperatives. So, yes, it was our number 2 policy. It was a policy that we thought that a federal government could accept, didn't cost the federal government any money, provided substantial time and cost savings.
It does put taxpayers' money at risk, though.
It does put taxpayers' money at risk to the extent that the mortgage comes under threat, there is a default, and the sale price is less than what the mortgage level will be. So there's a few if, buts and maybes as to whether or not an insurance would actually be recovered.
Oh dear, what could go wrong? If what we heard so far wasn't alarming, listen to this.
And so the government hasn't said whether or not they've had this independently modelled. Are they relying on your modelling for this policy?
Oh, we did provide some modelling for the government on this.
Does your modelling include how much taxpayers' money would be put at risk through these loans?
It doesn't identify what the default rate will be at any particular point in time.
Why not? That's a key issue for a government or for any party really that's coming into government in these restricted fiscal times.
The risk factors have changed quite significantly over the last 18 months, and as you say, since the Royal Commission, banks...
This is incredible. We've done the modelling, we've shared our modelling with the government, but we didn't really tell them how much the government might lose, how much money the government might lose. But you know why government didn't actually care about that? Because the government's money is not government's money. I keep saying that to people. The government's money is your money and my money, and the future money and of our children and grandchildren and forever thereafter. That's why they don't give a shit. They'll approve anything that's going to keep them in government and hopefully have them elected in the next elections. That's all that it's about, short term. Now we can all get angry and annoyed about what we just saw and what's going on in the news and the whole housing situation. It's not that much about what we think, it's what the market thinks. And let's see what the market thinks about the current state of the housing. I urge you to listen carefully, please, this next segment.
And I spoke with Evan Lucas from InvestSmart. Evan, the CBA's result wasn't well received by the market apart from the obviously bad numbers. Why was the response so strong?
At least the way you got to look at it is, again, it collectively moves into what we've seen from the other 3 banks that reported a couple of months ago to what we saw from CBA today, is that overall you are starting to see general increases in pressures we don't want to see, which is bad and doubtful debts, delinquencies, time to delinquencies moving out to that 90 days. Now, yes, you can also put down to the fact that they had a remediation cost inside of there that the market wasn't expecting, 714 mil, so that also comes into it. But overall, it filters into the overall theme we've been seeing from the banks, which is they are finally starting to see stress coming through their lending book, which clearly impacts the overall return, which is what CBA told you today, but it does also impact that longer-term stress that they are worried about in the longer term.
Home loan approvals data showed investor loans at their lowest level in over a decade, but first home buyer loan approvals are improving. Are we still seeing real constraint of credit by the banks?
Yes, we are. No, I think that's the sort of the way to look at it, is that yes, you can point to the fact that first homeowners are on the way up, but they are a very small portion of the overall housing market. So if you look at the overall combined number, it came in at 9.5 billion, and the majority of that is investor loans. And as you alluded to, Elise, it's falling at a very rapid rate. In fact, the charts that go out there are pretty staggering to look at. They're almost at a 45-degree linear angle downward on investor loans.
Trump's tweets continue to play havoc with global markets.
Well, you're perfectly capable of understanding what that means. Is they're saying that the banks' loan books are shrinking so much with mostly the investor loans, which are a large portion of their books anyway, and the charts are staggering, as he said. They're falling on an angle of 45%, and that just can't be good. So investors are almost completely out of the market. We know that the Chinese are out of the market as well. So who's buying? Well, you've got a few first home buyers trying to move in, live their lives, have families and all that. Nothing wrong with that. But as far as the housing and the lending and the banks, that's just not good news for any of the above. I didn't expect this video to run this long, but it is what it is. Thanks for watching, and we'll talk again in the next one.